If you've been trading for a while, then you've probably heard the phrase a fair value gap or an inefficiency or an imbalance. Now, these are all the same thing to me. And today in this video, I'm going to tell you everything that I would tell myself if I had just discovered what a fair value gap is. So that's everything you need to know about what it is and what you can do with it. Now, why should you listen to me instead of some other random guy on the internet? Because today, everything I'm going to teach you in this video has come directly from ICT himself. So you're not just listening to some random guy who's heard the fair value gap and then gone and tried to run with it. I've done the work, I've back tested, I've done all the work, I understand what I'm looking at, and everything that I'm going to tell you in this video has come straight from ICT himself. So you can take it with a pinch of salt still, obviously, because you shouldn't just trust me just because I'm saying that. You should still actually do the testing yourself and see if it works, but you can trust me a little bit knowing that I'm not just waffling. And if that's still not good enough for you, then hi, we should be friends. I like you, because you should still do the testing for all of this stuff yourself. You shouldn't just take my word for it, saying the way that you shouldn't just take ICT's word for it. You should do the testing yourself. So take everything with a pinch of salt. Obviously, don't take it as gospel, but I'm basically just going to be talking to myself as if I've just found what a fair value gap is. I'm going to be talking to myself with the added 2 to 3 years experience of working with a fair value gap. Also, I should just start this video by saying that even if you have been working with fair value gaps for some time, you might still learn something in this video, because I'm going to go into as much depth as I know. And I've autistically studied ICT for the past 2 years, so just stick around and you might learn something. And even if you don't learn anything, just let the video play until the end. I need that viewer attention. Anyway, let's get started. So what is a fair value gap? We're starting basic, obviously. A fair value gap is a pattern in 3 candles, as we can see here, with this candle and then the candle to the left of it and the candle to the right of it. So this 3 candle pattern, as we can see this box here, that is a fair value gap. So you want to see the first candle, and then the second candle is like the imbalance candle. So that's the candle that's going to shoot off in one direction. And then the third candle is not going to come back and cover the middle candle. So basically there's going to be a gap between the first candle's high and the third candle's low for this instance. There are 2 types of fair value gaps that we'll classify them as 2 types of fair value gaps. This fair value gap, this one is called a BISI, so a buy-side imbalance, sell-side inefficiency. That's not really that important. It's just if you're going to watch ICT, if you call something a BISI, it's a buy-side imbalance, sell-side inefficiency. Essentially, all it means is a bullish fair value gap. So you can see these are my bullish candles, and this is a bullish fair value gap, or a BISI. And then the opposite would be a sell-side imbalance, sell-side inefficiency. So if I just drag this over here and highlight this fair value gap is a SIBI, sell-side imbalance, buy-side inefficiency, or just a bearish fair value gap. Now, this next detail is something fairly new. It was taught in the 2024 mentorship, I'm pretty sure, for ICT's 2024 mentorship. And that is that when we're identifying a fair value gap, I can just get rid of this middle line because we'll talk about that later. We want to pay attention to where the bodies are. And what I mean by that is if we have what's called a volume imbalance as part of the fair value gap. So as you can see, these 2 top candles, the bodies are touching, the bodies are connected. These 2 bottom candles, you see that gap right there? You see that gap between the candles? When that happens, basically what we do is we encompass that into the fair value gap. So because the bodies aren't connected, we extend it and ignore the wick. Normally we would obviously do wick to wick, or like high to low, or low to high, I should say, for this one. But when the bodies don't connect like this, we have to include the volume imbalance, which is what this gap, when the bodies don't touch, that's a volume imbalance. We must include that in the fair value gap to get the correct measurements for the next little detail I'm going to show you. Right, okay, so there's 5 main levels in a fair value gap that you want to pay attention to. These 5 levels are the high of the fair value gap, the low of the fair value gap, the midpoint, the upper quadrant, and the lower quadrant. So if we just look at the charts now, we have obviously the high of the fair value gap here, the low of the fair value gap there, and then these 3 levels in the middle are basically the upper 75%, the middle point, or the consequent encroachment, as ICT will call it, it's just the midpoint 50% of the fair value gap, and then the lower quadrant, or the 25% of the fair value gap. Obviously 25, 75, obviously depends which way you measure it. It might say the other way around. Doesn't really matter, just upper quadrant, lower quadrant is like what you could do to to get rid of the confusion. Now, these levels are basically the very specific levels in a fair value gap that we're looking for price to react to. We're not just looking for price to bounce anywhere in this area. We're looking for it to react to very specific levels, i.e. one of these 5 levels. So as you can see with this fair value gap, it was inverted, which is where it basically goes through it and then comes back down and treats it to go the other way. And obviously in this case, we came back down, inverted this gap and hit the midpoint of it exactly. As you can see, low of this candle here in the top left, 21,310 and 0.75, and then obviously midpoint of the gap there, you can see the level, same number. So that's what we're looking for like when we want to see a really nice reaction. You can be a lot more confident in the reaction from a fair value gap when it reacts to those specific levels. Now, these gaps aren't just like always being respected, always being treated perfectly, otherwise trading would be a little bit too easy. So the things we need to pay attention to for when we're looking at what actual fair value gaps we want to trade are things like daily bias, narrative, time of day, key levels like key liquidity levels, all stuff like that is going to help you identify which fair value gaps you actually want to be trading / targeting, because we can use fair value gaps for both entries and we can use them for targets. Okay, so now what I'm going to do is I'm going to break down a trade that I took yesterday on Tuesday. What day was it yesterday? Tuesday the 7th of January. I'm going to break down a trade that I took using fair value gaps and everything I've just taught you. And then maybe you can see what it actually looks like in action. Now, I will show you the executions on Top Step X at the end of this video, so you can see that this isn't just a bullshit trade. Like, oh yeah, I definitely took this trade, guys. Let me just draw it up with my long tool. Yeah, that's exactly what I meant. No, I'm going to show you the executions, okay guys, don't worry, all open and honest. So okay, we had this daily fair value gap or daily SIBI, and as we can see there's a volume imbalance up here, so we have to include that. And then I measured the quadrants of this daily fair value gap. What I will do typically is if we have a big daily fair value gap or a big weekly fair value gap, I'll include the 75% and the 25%, the upper and lower quadrants. Any lower of a time frame, like hourly, 15-minute, 5-minute, 1 minute, I'll probably just highlight the midpoint and obviously the actual high and low of the fair value gap. I won't really ever pay attention to the upper and lower quadrants, but you can if you want to, but it's just a personal preference in my opinion, how detailed you want to be. But yeah, so we have this daily fair value gap, and then basically my bias for the day, if we drop down onto an hourly chart, my bias for this day was wanting to see these lows swept here, these equal lows. We can also see that we have this inefficiency here, or fair value gap, on the hourly chart, so we can extend that across, and then I tend to put them in a pink box just so I know which time frame they were marked up on. Now, using top-down analysis, we can see that in this hourly candle, because now we're on the 15-minute chart, there was a lot of back and forth as we came down here, but we did leave this 15-minute fair value gap here, so we can extend that across, and that also nicely lines up with the daily lower quadrant, so that's a nice added bit of confluence. And then we'll highlight the midpoint of that as well in the a dashed line, and then I'll make it thin as well. So as we can see, we have this liquidity level here, which was also the hourly fair value gap, so we'll have the buy side there, sweep up into that, into this 15-minute fair value gap, and then in here I was looking for my entry. Okay, so this was the trade I took, and it's a short at the low of this 5-minute fair value gap. I did actually enter on the 1 minute, but then realized that the 5 minute was basically there, and I had actually entered on the 5 minute without realizing. I'll show you exactly the fair value gap I entered on the 1 minute, but we will break the trade down on the 5 minute just because it's a bit cleaner. So as you can see, we had these fair value gaps here, and I entered on this one of the 934 candle. I entered short on that fair value gap with my stop at the high up here. And then as you can see, if I just get rid of the actual position, you can see that we broke below this low, which is a market structure shift. So then this fair value gap becomes significantly more important to me. There is a few different times where fair value gaps become exceedingly more important to me, and those fair value gaps are fair value gaps after a liquidity sweep and like a market structure shift, because that is literally my model, the 2022 model. Other fair value gaps are like first presented fair value gaps, so for the first fair value gap on regular trading hours at 9:30, and also fair value gaps below or above like important liquidity levels. So in my video about key liquidity levels, so like your London session, your New York session, your PM session, any fair value gaps directly underneath or above those
liquidity levels are also important. So obviously we had Asia high here, and the next fair value gap above Asia high was this 15-minute fair value gap, and obviously price tapped right up into that and then sold off. Also, if we pay attention to this 5-minute fair value gap, where are the bodies stopping in this? They're stopping right at the midpoint of the fair value gap. So even though it wicks through, we do not care if it wicks through. That is not it disrespecting the fair value gap. It is disrespecting it if the bodies close through the fair value gap. ICT has a very common saying that he says all the time. He says the wicks do the damage, the bodies tell the story. So the bodies are closing in the lower half of this fair value gap. So basically when I was seeing that in this trade, when it was playing out live, I became a bit scared, obviously, when it was like rushing up near my stop loss. But as soon as these 5-minute candle bodies kept closing in this 5-minute gap, it was like a calming thing basically for me. So because I obviously know that the bodies closing in the fair value gap, especially in the lower half of it, is more than, well, it's very good for basically my trade idea. It's what you want to see. Another thing, if a 5-minute fair value gap prints on the 5-minute chart, just to add a detail to this little explanation here, a 5-minute fair value gap, you want to see the 5-minute fair value gap, or the 5-minute bodies respect that fair value gap. The 1-minute candle bodies are obviously going to cut through this 5-minute gap, but obviously you want to see 1-minute fair value gaps be respected by 1-minute candles. And like for every time frame, the time frame that the fair value gap forms on is the time frame that you want to see the bodies close on it. So obviously for like a daily chart, you want to see the daily candles respect it. You don't care if it's a 15-minute candle closes through it. That's not how it works. So there we go, guys. That is everything I've got to teach you for this video. But I will just show you, obviously, like I said, the executions on TopStepX on my Express account. We are sitting at break even right now because I literally just started trading this account this year. I started trading. I lost a trade on Monday, which actually should have been an invalid trade, so I'm kind of annoyed about that. And then took this trade yesterday, and this one was a winner. So as you can see, executions up here, entered at 21,753.5. High of this candle here, 21,753.5. So I entered at the high of that fair value gap, like I said, and then I got out down here. I can't actually get the number because the candle is in the way. Let's see if I can spread it across. So there you go. If you were interested in where I exited, it was 21,641.5. So how many points was that? Like a 100-point trade? Something like that? Yeah. So if you want to learn a bit more about fair value gaps, I might teach it in a later video, anything else that I can think of. But for now, that's all I'm going to be showing you in this video. So yeah, hope you enjoyed and you learned something. I'll see you guys later.